Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on NTPC Limited. Our analyst maintains buy on NTPC with a revised price target of Rs 425. NTPC plans to add significant thermal power capacities, that is 16.8 gigawatts, beyond FY26, apart from already under construction capacities of 10 gigawatts, is coming at right timing of peak power cycle. Core thermal power business earns a regulated ROE and a higher capex intensity would drive earnings growth and offer cash flow visibility. NTPC's RE expansion plan of 20 gigawatts by FY27 and 60 gigawatts by FY32 would mean meaningful EBITDA contribution apart from improving ESG score. Power PSU valuation are at a steep discount of 35 to 40% when compared to private power companies. We expect this gap for NTPC, which is discount of 45% versus private listed companies, to narrow down, given the favorable dynamics for its core thermal power business, supported by rising peak power deficit, high growth for RE and a likely improvement in ESG score. We maintain a buy on NTPC with a revised price target of Rs 425, given strong earning growth visibility, reasonable valuation of 2 times FY26 price to book value, and healthy dividend yield of 3%. Next, we have an update on Strides Pharma Science. Strides has turned around the company by reporting the highest ever EBITDA, driven by strong traction in the US due to transfer pricing benefit of Ecosapent, no price erosion pressure in the base portfolio, and new product launches. Going forward, the company expected to continue to report highest ever EBITDA, led by full impact of Ecosapent and a partial impact of Suprep, resulting into higher cash flow. The company continues to control cost, followed by a healthy product mix, which would aid the 20% EBITDA by FY26. A healthy product mix result in strong cash flows, result in reducing its net debt to EBITDA to 2.8x. Hence, we maintain buy on the stock. Vesepa and Supreps are meaningful products and its full year impact to be seen from FY25. Hence, we have increased our FY25 and FY26 EPS by 14% and 24% respectively. The stock is currently trading at 18.3 times FY25 EPS and 13.2 times FY26 EPS, indicating attractive valuation. Due to robust US outlook and EBITDA margin inching towards its all-time high at 20%, we ascribe a PE of 15 times on FY26 EPS to arrive at a price target of Rs 916.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.